Good evening, and welcome to today's meeting of the Commonwealth Club of California. You can find us online at commonwealthclub.org, on Facebook and Twitter, and on the club's YouTube channel. I'm Dennis Wu, past chair of the Commonwealth Club's Board of Governors and a member of the Board of Directors of the Committee of 100. I'm your chair for today's program. This program has been co-organized by the Committee of 100, established in 1990 as a nonprofit organization. The Committee of 100 has a rich legacy of harnessing the power of its distinguished membership to address significant, complex issues pertaining to Americans of Chinese descent and U.S.-China relations. Today's program is another in a series. The Committee of 100 has presented in cooperation with the Commonwealth Club on topics involving U.S. bilateral relations. Today, we will discuss China's financial investments in the U.S. and whether these are toxic or beneficial to America. Our guests are Ping Ni, President of Wangshan America Corporation, a wholly U.S. subsidiary of Wangshan Group Company in Hangzhou, China, and Dr. Yukon Huang, Senior Fellow at the Carnegie Endowment, former country director of China and the World Bank, and author of the book, Cracking the China Conundrum, Why Conventional Economic Wisdom is Wrong. Our moderator today will be Dr. George Koo, former vice chair of the Committee of 100 and online contributor to the Asia Times. Some pundits and politicians imply that investments from China are somehow not above board and are detrimental to the U.S. economy. Even though Wangshan America has been investing in and acquiring U.S. companies since 1994, most of the American public has likely never heard of the company. Much of Wangshan's focus is in the automotive components sector, and their annual revenue has topped $4 billion. They also operate in clean energy and real estate with operations in 26 states. Today, we will discuss Wangshan as a case study, shedding light on the pros and cons of China's investment in the United States. Let me say a bit more about our panelists. Ping Ni has served as president of Wangshan America Corporation since its inception in 1994. In 2016, Mr. Ni was honored as the most influential business person of the year by the China General Chamber of Commerce, USA. Mr. Ni received his bachelor's degree and MBA degrees from Zhejiang University, after which he joined Wangshan and studied graduate economics at the University of Kentucky. Yukon Huang remains an advisor to the World Bank and various government and corporations. His research focused on China's economy and its regional and global impact. Dr. Huang has published widely on development issues in professional journals and the public media. He's a featured commentator for the Financial Times, and his articles are seen frequently in the Wall Street Journal, Bloomberg, and Foreign Affairs. He holds a PhD in economics from Princeton University. Our moderator, Dr. George Koo, served for many years as an advisor and board member of Dongfeng Fuji Thompson, a three-party joint venture that manufactures components for automotive engine in Wuhan, China. He retired in 2008 from the Chinese Services Group of Deloitte. He holds an MBA from Santa Clara University, a master's in chemical engineering from MIT, and a doctorate from the Stevens Institute of Technology. Please welcome Ping Ni, Yukon Huang, and George Koo.
Well, good evening. With that, thank you, Dennis. That was a great introduction. We can dive right into tonight's conversation. Yukon Huang has written a book on cracking the China conundrum. Tonight, we're actually going to talk about an American conundrum, and it's the American conundrum about China. specifically about China investments. So we couldn't think of a better example of the breadth of China investments that's being made here in the form of a company here called Wanxiang. Most of you probably haven't heard about Wanxiang, so we're going to get Mr. Ni here to explain and set the stage for this discussion. We will have a professional economist well-versed in what's going on in China by virtue of being the country director for the World Bank to spell and explain how investments can harm or help recipient countries. So, Ping, let's start with you. Give us a little background about your parent company and how it got started in Hangzhou.
Okay. First of all, I'm very honored to be here, and so thank you, George. And this is, I was told that this is a modern building with 115 years history, so so happy birthday. And actually, this is the first place I ever been that I'm sitting on the podium, but with 2 glasses of water, so it's a very nice treatment. So Wanxiang is a Chinese company, and our chairman who founded Wanxiang back in 1969, and with $500 as a bicycle repair shop. So obviously, at the very beginning, for the first 10 years, the company struggled, and simply because the political environment that private business was not allowed, officially allowed in China. And Wanxiang could not be part of the China's official economic system, which means you don't have a supplier, you don't have a customer, and you have to be on your own. So after 10 years, it was a big struggle. And until, later part of 1970s, China started its economic reform. In fact, this year is China's 40 years anniversary of the economic reform. So table turnaround, Wanxiang all of a sudden became a hero in China. I remember in the 80s, early 80s actually, the Time magazine, Newsweek, Businessweek, all the American articles, the magazines had articles about Wanxiang as a representative of the China's free market economy, development. So, with the economic reform and China's domestic growth, Wanxiang became the largest auto part company in China. And I was told just recently was the first one went to IPO in Shenzhen Stock Exchange as a private business back in 1993, I think.
Mm. How does one go from a bicycle repair into automotive components? That sounds like an interesting jump.
Yeah, maybe eventually we will go back to the bicycle repair. Because right now, you can see in China, the trouble is we got too many cars, but less bicycle. And so we follow the trend, basically. I would always say this, Wanxiang is a lucky company. And China's 40 years, economic reform had created huge opportunities for a company like Wanxiang. And our chairman always saying that, without this kind of reform, without China open its market and allow private business to exist, Wanxiang would never exist. If that did not happen, I'm sure we will still be in the bicycle repair shop, which is not how many bicycles to be repaired anyway in China today.
Well, with all that bicycle rental business and bicycles all over the place, I think bicycle repair has actually got a great future. But you said the company went public at 1993. So it was after you've gone IPO that you made a decision to come and invest in the U.S., or what?
Actually, I would say coming to the United States was not necessarily a plan. I was actually interviewed by Harvard Business School, they put a case study together and they asked the question, what's your plan, business plan? I told them we didn't have a business plan. And that was shocking to them, but anyway, I would say we got pushed into the business. And I was in the school. I got a call from our chairman and they say, can you help? I said, no, because I got a good scholarship and I got a good, I love the school environment. I say, I don't want, leave the school, just come to the business because I had no clue how to run a business in the United States. And he said, oh, please, if you could, because we got a lot of complaints from customers and who are really yelling and screaming, say, you guys have to come here. If you want to be a global company, if you want to serve us, you got to have a representative here in the United States. So I had to leave school and start as a home office. And now today, I can still call that American dream for a Chinese student. But yeah, start with my own money actually at the beginning, and just a home office. So I keep telling my wife, I'm a very traditional guy, one company, that's all I worked for, and one title, never changed. When I was one man, I was the president, I'm still the president.
I'm sure there's an honorary doctorate degree in the future waiting for you.
Yeah, I'm waiting for you to recommend. Actually, Dr. Huang for sure can help me on that.
But you say you were here just to be a representative. So what were your Wanxiang's customers? Why do they ask for or demand a presence in the U.S.? Why was that?
This is similar to today, frankly speaking, even between U.S. and China, there's a lot of people traveling to China. A lot of people from China come to the United States. But I would say the communication, I call effective communication, are still a major issue. And I use this example. It has nothing to do with the language, absolutely have nothing to do with the language. I remember 2015 when President Xi came here, through Seattle, I think. And we welcomed a delegation from China. So we're all Chinese, speak all in Chinese. So we say, hey, welcome here. This is a beautiful weather here. We got a 70 degrees. And the Chinese delegation got really scared. Say, what? 70 degrees outside? So, nothing about the language, but we cannot communicate.
Talk a little bit about how Wanxiang USA transformed from being a representative office or one-man band to become such a big conglomerate, if you will, of so many companies that you're investing and managing in the U.S.?
I would say, I call this is a Chinese seed. It is coming from China, so it's a Chinese seed. But it is American soil, American water, American sunshine, and we grow. We took an advantage in terms of synergy between U.S. and China. And I always say this, we can always speak better in Chinese in the United States than our competitors. And also we can speak much better in English when we go back to China compared to our competitors. So when you combine the two, given the nature that, these two countries, one is the largest developed country, one is the largest developing country, there's an absolutely tremendous synergy. As Dr. Huang was talking about, it's a structural, So we took advantage between the two, and naturally we grow very, very quickly. I was joking, back, like whenever there's a downturn in the United States, our investment sometimes make me feel a little guilty. We're like robbing the bank, and the return is just so high. And I was joking, our chairman think I was better manager. I said, no, it's just because of the time and the place. And our return in the United States so far is much better than our return of our investment in China. Not because I was smarter, but I can tell you for sure because of synergy. So that allows us to grow. We have more than 18,000 people now, and we have more than 20 plants in the United States. And One example in California is that we bought the company called Fisker at that time out of the bankruptcy. When we took it over, it's like 20 people left. And that was 2014. So now we built a brand new car plant outside of LA. And now we renamed that company called Comma. Just last Friday, Comma was named the luxury green car of the year in the United States at the Washington, D.C. That plant alone now hires about 1,000 people. So we made Governor Brown very happy here.
Well, before we started this panel, Ping said, hit me hard with controversial questions. I love them. So please keep that in mind. Don't have to be in Chinese, 客气, okay? Come up, think of the hardest question you want to throw at him, and he will do justice.
I know where the green room is.
So I'm going to try to start this trend, if I may. You said synergy, okay, and I understand the synergy part, the cross-cultural part, and that you have strength on both sides. But how in the world does that make you successful in making automotive components and selling them in the U.S.?
I always use this as an example. We call ourselves sweet chocolate. So there's a chocolate called M&M. Mm-hmm. Everybody like it. My kid loved it. And and we tried to say, no, don't take too much. And so we're the chocolate. We're the M&M. I would say 10 years ago, the first M for us is the material. So at that time, back in the 2007, 2008, we took a plan from Ford, we took a plan from Chrysler, and those are the plants. They were about ready to shut them down. So we became a hero to the unions. So you would think, come on, you're Chinese coming here to grab an American job. No, that's absolutely not true. Because we got unions, in many cases, I'm talking about UAW, act as our partner, going to the auction to say, we want them to win the auction. Why?
Why?
Yeah, two reasons. Two reasons. One is that they know that we will do our best to save the company. If anybody can screw up in terms of by sucking the cash out, leave the union with the key and so forth and so on, Wanshan as a Chinese company would never be able to do that because politically we're going to trigger the bomb. So they're pretty smart. They say, give the key to you, at least you have more pressure that you're going to do everything you can to save the company. So they were pretty smart on that. Secondly, Wanshan has a policy we call invest in the community. So our policy is that other than the tax distribution, that, because we have all LLC, we need to pull the cash out. All the money that each company made will be kept in the company to reinvest. So our approach is very different. I was at the UAW's headquarters. I was with one of their vice president. They showed me around the UAW, So we walked by a bunch of a room. I saw a lot of people there, like a teacher teaching something. So I asked Mike, I said, Mike, what's going on here? He said, oh, it's not your business. Don't bother. I said, no, I was thinking, something going on here. You got a lot of training class here. He said, yeah, we're teaching them how to deal with the private equity fund.
Okay. Well, I think UConn has been very patient listening to the two of us. I just want to add one real quick question. Give me a quick answer, then I'm going to go to
Sure, absolutely.
So after you talked about all this, what is your secret sauce that can succeed when the Fords and the others have to close down the plant and don't succeed? What's the difference?
Synergy.
Oh, my God.
Now I know how to act like the people from D.C., right? Okay, so let me just finish very quickly. The first M at that time is material. We can save the company. Ford and Chrysler couldn't do that because we have international connection to bring the low-cost material. The second M is the money at that time because a lot of companies need the capital. Now, today, we're still MM, but a different content. The first M is the market, which is in China. We can ship a lot of product to China because we have market access there, better than our competitor here in the United States. The second M is the management skill because we turn around a lot of companies, so we have a wonderful team that can do the job. Better answer?
Okay. Okay. We have some questions, and there's some directed towards you, Yukon. But before we get to the questions, I noticed one thing about country directors for the World Bank. They seem to know what the hell they're talking about, excuse the expression, about China.
We're trained to pretend that we know a lot.
So could you explain what it is that you did as a country director for the World Bank?
Well, let me start off by building upon what Pining's talked about, and let's go back to bicycles and cars. When I went to China in 1997, all you could see on the streets were bicycles, okay? And
I was one of them riding.
I couldn't drive. Do you know how hard it is to drive down a 4-lane highway when it's all bicycles? You can't make a right turn, you can't make a left turn, it's a nightmare. By the time I left in 2005, there were no bicycles. It was all cars. It was a nightmare. Now, I just went back. I went back to Beijing 6 months ago, and I was shocked because once again, there were a lot of bicycles. Oh, yeah? And of course, you're going to see these same bicycles here because they don't have to be docked. They have a GPS. They cost 25 cents for an hour. You can park it anywhere you want. And this time said, is this progress? We go from bicycle cars back to bicycles. When I went to China in 97, and I was fortunate because I got to work with a very far-reaching, thoughtful premier, Zhu Rongji. And Zhu Rongji had two issues that he was working with us in the World Bank. And this is 97. And he said to me, our challenge is to integrate into the world economy. I must get into WTO. The rules of the game are established by America, Europe. These are tough rules. I've been working at it for years. It took him a decade, but China joined WTO in 2001. Before that, it wasn't generating any trade surpluses. Exports and imports were stagnant. Of course, we now know what's happened. China's become a major trading partner. And the irony of this success is it also causes tensions. Now, the second thing that Zhu Rongji mentioned, which I also thought was really kind of interesting, he says infrastructure is the key to development and growth. You can have entrepreneurs, you can have finance, you can have foreign investment, but unless they have the infrastructure to run and be able to do things smoothly, you cannot succeed. So I want you, the World Bank, to put your projects to link our coastal areas to the interior, to Chongqing, to Chengdu, all the way to Xinjiang. And little did I realize at that time that this was actually the beginning of the so-called One Belt, One Road, to connect the Middle Kingdom, not just to the Pacific and North America, but through Central Asia and the West. And I think these were two critical issues. And the major tenet, the principle that China had to the World Bank, was essentially they said to us, we can develop and succeed with or without the World Bank, but we'll do it a lot faster with foreign investment. So that's what we actually need. So the great irony when I think about what we have today is that there are a lot of tensions between the United States and China. They lie upon trade tensions, they lie on foreign investment tensions, and we're missing a little bit, of course, the positive aspects that Ping has discussed, how foreign investment actually can bridge and help both sides, and we're stuck a lot on the tensions. And I think this is, for me, a historical situation, a key question. How come success on China's side, and frankly, in the United States is leading the world in the global recovery. Unemployment rates in the U.S. are the lowest levels. Wages are starting to rise. U.S. generated a huge trade deficit, but it's a sign of success because imports have soared in America. Yet today we find that U.S.-China tensions are right at the edge of becoming fairly serious. And I think one of the issues here is what role can foreign investment play? And China is a very good example of that positive role.
Yeah. as long as you brought up the World Bank financing, and you brought up the One Belt, One Road, I'm going to digress a minute and ask you. The Asian Infrastructure Investment Bank has funded about almost $5 billion so far, from the beginning to now, 12 countries. Interestingly enough, India has been the largest recipient. Now, the question I'm curious about is, when AIIB finances these projects, are there a methodology very similar to the way the World Bank evaluates these kinds of projects? Because one of the projects that did not succeed, even though AIIB apparently was not involved in it, but China made an investment in Sri Lanka that turned out to be a total disaster. Why is it a total disaster? Because apparently the economy, as a result of the infrastructure investments, didn't rise enough to be able to pay for the financing. But is the model similar to the way World Bank uses the model?
Well, China was very concerned to make sure that this first multilateral initiative that China was promoting was consistent with global norms. So the guidelines that you refer to, whether it's environmental, financial, economic, or social, were essentially devised based upon the guidelines that the World Bank, the ADB, the EBRD,
Okay.
so the senior advisors. And there's what I call full consistency in many of these practices.
Okay. So if World Bank had financed Sri Lanka, they probably would have run into the same disaster. Is that right? Did you have any other comments in regard to the Wanshan presence
I
in the
think
U.S.?
the interesting thing for me at Wangshan is successful because it's in manufacturing. It generates jobs. It's a private company. In 2016, Chinese foreign investment in China tripled in comparison with the previous year to $45 billion. Okay? That's really important. 70% of this is private money. It's been a win-win. But there's still tensions. There's tensions because there's concerns about the role of the state in China. There's tensions because the role of foreign investment that China plays is quite different than previous instances of foreign investment and the tensions that arose. You go back 70 years when the U.S. was pouring money into Europe, and Europe was concerned about U.S. influence in Europe being too great. Tensions emerged. Go back to 1980, Japanese money pouring into the United States, concerns about Japan sensitivities and issues. Today you have concerns about China coming in. What is actually different between a China situation, a Japanese situation, and the U.S. position 70 years ago? For the first time, you have this kind of unusual situation that the money is coming from a developing country to a developed. It's always been developed to developing. The second thing that's quite different is the role of the state. That creates a sensitivity that did not exist before. The third thing that's quite different is that the Chinese search for foreign investment overseas is more diversified in objectives. It's not just mineral resources, for example, in Latin America or Africa. It is also related to manufacturing, extending export links, but it's also the question of trying to become more innovative and trying to build up the technological base in China. And that creates sensitivities. So some of these elements today complicates the issue of foreign investment to a degree that we did not have in previous times. And this makes the challenge of trying to deal with it much more difficult. But in fact, if we focus on the benefits, that $45 billion that came into America, we have 435 congressional districts here in the United States. 425 of them benefited from Chinese foreign investment. 150,000 jobs created by Chinese investment today, very, very significant. Foreign invested companies pay higher salaries than domestic companies. They tend to be here for a longer run. We miss all these kinds of positive issues, but we also have to be realistic to recognize that there are also tensions and risks. And if we have to manage these things correctly, then we can have something which is relatively productive. But the unfortunate thing is the politics gets very complicated. We get stuck on a lot of the tensions and the frictions and some of the alarmist statements that you read in the media. So that's what I try to address in my book. How do we get into this situation when there's actually quite a bit of benefits, but there's also quite a bit of concerns?
Okay, we got a lot of questions, and I'll be able to get to as many of them as possible if you guys keep your answers short and direct, okay? I have one that I can answer real quickly. How do you spell Wanxiang? I can take care of that one. Wanxiang, which is Pinyin for Wanxiang. Wanxiang can be interpreted as 10,000 directions. Would you agree with that?
Yeah, this came from our product. Our Wanxiang's original product is called Universal Join. So our chairman borrowed the first word, universal. So universal in China is 10,000 direction, yes. Yeah. So it's called Wanxiang.
Okay. So coming back to you.
Sure.
You said that you guys seem to get along with unions, which seems to be very contrary to what's reported in the press about how Chinese companies have trouble getting along with American labor unions. The press doesn't necessarily report Wanxiang per se, but I know, for example, there's a Fuyao Glass in Ohio that didn't quite know how to handle labor unions. Is there a difference between the way you deal with unions and some other Chinese companies deal with unions?
I'm more charming.
Huh?
Short answer he's looking for. No, I would say, I don't know how other people did that, but our policy has always been transparency. I think that's one of the bigger issues. If you cannot communicate effectively, at least let's be transparent. So we try to be as transparent as possible. I got the FBI, IRS, immigration, U.S. Customs, everybody coming, they all love us, which is fine. So, to build a healthy company, I feel that, all our people are really coming to help us. That's my perspective, because they make us better and stronger in a competition. So when we keep transparent, everybody knows what we're doing inside the company, as well as with these government officials. And sometimes we do have a different opinion, we will argue, and that actually they recommend us to hire a better lawyer. So, but on the other side, we keep very transparent. So we want to show the union we are indeed on the same boat. When the damn boat sinks, everybody gets wet. There's no other choice.
I'm not in favor of keeping lawyers employed. There's a subject matter about intellectual property. And do you run into this in your investments in the U.S., being accused of you're here to take away intellectual property? Or are you here, do you bring intellectual property with you in your investments?
Very good question. Controversial now.
Yeah. Wait till the next one.
Okay. So let's just be honest first, okay? Make an assumption, a question, say, if you are a private business, if United States has a better system to protect your IP than China, where you keep your IP? It's a natural conclusion, right? You don't need to even guess. However, I want to be fair to say this. China is in the developing stage. And in fact, Chinese government gave us more headache about IP protection than the US government. I give you an example. We have one major customer. They want us to put a marking on their product. The product was stopped at the Chinese custom. They won't allow us to release the product, so we had to go back to the customer, say, the Chinese government say, we need to have authorization from you because it's violating IP. The customer gave us a letter. We gave to the Chinese custom. They said, no, that's just a letter. We need to have a legal opinion. So we went to the customer again, say, okay, we need a legal opinion. Get your lawyer write up something. Lawyer wrote up something, we gave to the Chinese customer. They still say, no, you have to register by us, by the customer's the lawyer register into the Chinese customs system. We shut down the customer. So I would say that's the example to the extreme on one side. Obviously, we have example on the extreme on the other side. Both are very true. Both are very true. So my theory is always this. The China's 30 years or 40 years economic reform, what the reform means? Reform means break the rules, okay? Here in the United States, we have a 200, 300 years of system. Everybody follows, right? But in China, if you want to be successful, you want to be brave, you're going to push the envelope, you're going to have to break the rule. Otherwise, there's no reform, which is good. But the bad part is people probably in the mindset do not necessarily view the rule is that important. So people will take a shortcut from time to time. However, I would say the Chinese government, from what we can see, they're working very hard, try to put this into the system, but it does take time. It's just not, I was telling my kid, they couldn't even survive in China. They cannot even cross the street because they don't know what the red line means.
Okay, I think we need to set aside this intellectual property, reverse engineering, copy, etc., for another day. It's a very long subject. I need a quick answer for you on this one. Then I have one important question to ask you. This question is: have you run into racism in doing business in the U.S.? Yes, no?
No.
No, fine. End of subject. I want to ask you drawing on your expertise, not necessarily related to Wanxiang. China is going to go all electric, 2025? All the vehicles are going to be electric vehicles? Who's going to be ahead of the game by 2025? Is China going to be ahead of U.S.? Technology-wise, where do you come in with Fisker and your A123 battery company and so on? Are you well positioned in this race, and which way is it going to come up?
I would say China definitely is going to be a bigger market.
Yeah.
And frankly speaking, this is always a debate about the democracy system. Is that effective or not effective? Obviously, we can all see this. Chinese government has been very effective in terms of promoting electrical vehicle in China because the Chinese government is very capable to manage the country. So that's a good and bad, whatever different view you can have. And however, I still think the innovation. I was talking to Kevin when we were on the way here. Bay Area is a perfect example. The innovation in the United States is something that we have as a treasure in our economic system. So I think, the market is going to be in China. There's a lot of technology going to come out in the Bay Area, whether it's connectivity or autonomous driving. So our job is still to see if we can collectively or successfully combine the two resources together, then yes, we will be a player there.
Okay, but how do you predict which country will actually be the technological leader at the end of the day when it comes to electric vehicles? Will China succeed in becoming a technological leader because they're insisting that we get rid of all the gas guzzlers by 2025?
So let me put it this way. Fundamental research, I would think, still probably coming from the United States. But application technology and also, the technology related with, putting the vehicle on the street, yes, China has a much bigger mass compared to what we have here right now.
Okay. Yukon, couple questions here. One of them has to do with, I think there's a couple questions on this matter, which I think reflects perhaps the questioners are a little out of date. It has to do with, quote unquote, renminbi manipulation. My understanding is for the last year or so, since Trump became president, the renminbi has actually gone the other way, strengthened. So you can't really say they're manipulating to weaken the renminbi. But what is your overall take on this question about currency manipulation? Aren't we, in the U.S., equally as guilty of manipulating the currency by making it weaker? Didn't the Secretary of Treasury just say, hey, we want the cheap dollar because that's good for business? How do you take, what's your take on this issue?
Your question is embarrassing for economists. and the reason
Well, that's good.
And the reason it's embarrassing, of course, is no two economists will give you the same answer. All right, it's a big issue. We don't have a standard definition of what it means by manipulating the currency. People think it just means I change the exchange rate. But as you pointed out, monetary policy changes the exchange rate. Fiscal policy does. Tariffs and duties. Capital flows changes the exchange rate. So there's no easy way of defining manipulation. But the simple answer to what's going on in China is the following. Its exchange rate was essentially pegged to the dollar until about 2004 and 5. And then when China's trade surpluses got very large, it essentially allowed the exchange rate to start to float. So back then it was 8.27 to the dollar. Today it's something like 6.4, 6.5 going up or down. So the RMB is appreciated by about 50% if you take into consideration prices and who they're trading with today. And today, most specialists would say it's not being manipulated. Now, how do you measure this? How do you know whether it isn't? One way of determining it is whether China's foreign reserves are continuing to rise, or are they stable, or are they falling? In 2000, the year 2000, before China joined WTO, it only had $200 billion of reserves. Peanuts. This went up very rapidly over 10 years to $4 trillion, the fastest increase we've ever seen. So there's accusations about manipulation. You're not allowing the renminbi to get stronger quickly enough. But since then, since 2014, China's reserves have fallen from $4 trillion back to $3 trillion. They sort of stabilized. So the consensus of view now is the renminbi is appropriately valued, no more manipulations occurring. In fact, China is trying to prevent the renminbi from falling too much.
Yeah.
So it's using the reserves to make it stronger than might normally be the case. So it's actually the perverse argument.
And why do you think the Beijing's policy is to keep the renminbi strong?
Well, China has found that the exchange rate fluctuations are very cyclical, very erratic. They like stability. They want the renminbi to be more of a global regional currency. They want it to be somewhat stable. If you want it to be a regional currency, you want your values to be somewhat more stable and moderate. That's a U.S. view, too. The U.S. has always argued for the dollar being relatively strong or stable because the dollar accounts for 90% essentially of the global trade volumes and as a reserve. So if you have any interest in your currency being used a broadly way, you want it to be relatively moving to market forces, but you also want it to be relatively stable.
Well, you can argue that the dollar has been steadily weakened ever since, 9/11, but it hasn't lost any appeal as a safe currency to hold on to because of the world psychology that despite the weakening dollar, it's still a safer dollar to hold on to. Do you agree with that?
No, I think so. It remains practically the only viable global currency. The flip side of it, which many people don't realize, that is if the dollar continues to be the dominant global currency, it actually is almost impossible for America to run a trade surplus. Because if the dollar is going to be used by everyone overseas for this purpose or not, then the practical question is, how do you get it out there? They have to be able to hold it. There's only two ways that you can make the dollar available globally. One is you give it away. Okay, it's foreign aid. The second is you run trade deficits. And you pay foreigners with dollars. Essentially, that's what's been happening. So the U.S. has run a foreign trade deficit for 40 years running. Good times or bad times. So most economists have concluded that whether America has a trade deficit or surplus may not matter too much as long as the U.S. economy remains relatively strong. And a focus on a deficit or not is actually probably not a very good thing to do.
Okay, now, are you saying then by proliferating the dollar all around the world, it actually protects the dollar as a hard currency of choice for all the other countries?
It makes it available because what else do you have? You're either going to get euros or yens, but that doesn't work anymore because yen's been falling in value. So you need a situation, unless you have something different, a gold or a IMF scatter. Bitcoin. That's why Bitcoin's becoming. They want something which is neutral or not amenable, whatever it is. And this is, I think, a very unique role of the dollar.
Okay, now if there's a school of thought that if China is trying to make renminbi also a currency of choice
Right.
in world trade and
Right.
so on, should congressmen and senators be concerned that this is going to take away the dominance of the U.S. dollar?
Well, this is a very controversial issue because for many years now, Beijing has wanted to promote the RMB as a global currency. And I basically feel that it's not actually a very important objective for China. Actually, for China, there are many more things that should be worried about. Because I go back to the point I just made earlier. If you want the RMB to be a global currency, it has to be available out there. Okay, physically available like the dollar. How can China do this? Is it going to be willing to give it away? Doesn't make much sense for a poor country to be giving away money to rich countries, right? The second way, you have to run trade deficits. China doesn't run trade deficits, it runs trade surpluses. It gets dollars, it doesn't give away RMB. It's not technically possible, actually, for the RMB to be a global currency. So why is China interested, however, in having the RMB as a global currency? Because it feels actually that America has too much control over the international financial system. It wants some choice. That's always been China's argument. There should be more alternatives in this world. So there's also what I call a political, strategic, international concern beyond what I call the pure economics or trade issue.
What about the bilateral swap agreements between China and other countries?
Well, they do that
to avoid dealing in dollars.
Yeah, they want to get some more currency out there. They want to get some more assurances. They want to give people flexibility. But in terms of significance, it's not really actually a major issue or a major policy instrument.
Yeah, okay. This one we talked about during the media interview, which is that which country is stricter on foreign investment towards the other country? China towards U.S. or U.S. towards China?
This is a sensitive question here. If you go back decades, the view is fairly clear universally. Here is the United States. It's the economic superpower, dominant in every sphere. Part of that understanding, when the World Bank was created, the IMF was created, is that the U.S. could afford to be flexible in terms of setting tariffs, rules, guidelines, so the developing countries could allow a room to maneuver in order to be able to grow. That was the assumption globally. That's why we created development banks. That's why we provided assistance to the world. In some ways, China's been too successful. It's grown so rapidly, so fast, it's so big. It has basically raised questions about its role in the global economy. Now, when China joined WTO, it cut its tariffs enormously. It opened up its markets in many areas. But it still has higher tariffs than America or Europe. But its tariffs are about the same as other developing countries. But in the views of many people, China needs to go further. And I think on some of these areas, it probably should. Its institutions are stronger. It's got a powerful market. It could open up the domestic economy a bit more. I think this should be part of the discussion between U.S. and China over the coming years.
I guess there's a follow-up question similar to that, which is that there's a question that would China allow U.S. to buy assets in China in the same way that China is, quote unquote, allowed to buy assets here in this country?
That's not, of course, been the historical precedent. It's not been the case before.
Has not been, okay.
So what you hear a lot about today is the word reciprocity. we want to be treated in terms of access to the Chinese market the same way that China has access to the American market. I think this is a contentious issue because if you go out there globally, that's not true for other countries. You can't do various things in Japan. You can't do various things in India. You can't do various countries in Indonesia. So the reciprocity actually does not work universally.
Yeah.
This is part of what I just mentioned earlier. The global superpower is the United States. So it's created a system of this form. But now there is, I think, a legitimate concern about whether that should be modified. And I think this is something that needs to be discussed in the coming years.
Well, somewhat related, how do you see this, and Ping, please pitch in as well. China investments are subject to the Committee of, was it CFIUS?
CFIUS.
Investigating Foreign Investments and CFIUS, right?
Yeah.
It seems like if you're from China, you're more likely to be reviewed by CFIUS than investment from any other country. And so far, we know that for sure, Chinese investments are more likely to be not approved, maybe to the twice as more likely to be not approved as other foreign investment. Is there a reasonable, rational, economist explanation for this phenomena?
This is probably one of the most sensitive issues between China and the United States.
Yeah.
Okay. China's
That's why I brought it up.
Okay. China is probably number 12, 13, 14 in the size of its foreign investment in the United States, but it ranks number 1 in the number of claims that CFIUS has to look at. So an enormous percentage of Chinese investment in the United States gets reviewed, more so than you would expect. And this goes back to makes China different. What makes China different from a Europe or Japan? And it's two things. State-owned enterprises are involved. A interest in technology is one of the conditions that Chinese companies are interested in. So they raise these questions of security. Now, I think there are, and economists would say there are legitimate security concerns, and those should be subject to review. But CFIUS guidelines go what I would call a bit further than you would expect is reasonable, and secondly, they're not as clear, so they need to be actually handled. So what is the impact? The impact depends upon how practical is the system applied. Let me give you an example. Huawei, major telecommunications company in China, unable to break into the market here because CFIUS and other commentary says it's a security risk. And it could throw problems in terms of the communication system in the United States. Huawei has a really strong presence in Europe.
Yeah.
So why is it that Europe was willing to let Huawei come in, but America was not? Well, Europe decided that Huawei had something to offer, but security was a legitimate concern. So as a condition of entry, Europe established a unit or agency under its control to scrutinize the design, the aspects of Huawei's equipment, purely for the security concerns, to make sure that it met European standards or risk issues before it was allowed in.
Why couldn't the U.S. do the same thing?
Well, this is what Huawei, ZTE, other Chinese companies have asked. We realize you have a legitimate security concern. The only way we can actually leave it is have you actually look at this and make sure it works. And there's a cost, the inspection, the regulations. We're willing to bear that cost.
Yeah.
So this is the kind of issue where I say there is an issue. There's ambiguity how to address it. This is the kind of thing where U.S.-China discussion should be focusing on.
Well, I guess there is I have a sort of a contrary view about that, which is that until recently, all security cameras on premises of military bases and all the other things are made in China. Until, I don't know, it was Wall Street Journal or somebody reported, hey, all these security cameras are made in China. So Pentagon has to go and remove all the cameras and probably pay 3 times more to get the cameras back in that's made elsewhere. So I think there's a little more to it than I guess there's this bias I just can't get over. I keep thinking there's got to be a bias running through the way the business is managed.
But you know, you have these trust elements, very hard to break. When I was based in China, Jiang Zemin, the president, was ordering a Boeing 747. They wanted the same thing as the Air Force One. Okay, and this is a big security issue, of course. This is going to be a plane the Chinese fly. It's going to be made by Boeing because no one else can make a Boeing 747. So China sent over a whole team of security specialists to Boeing's factory to make sure when the plane was being outfitted and everything else, it was okay, right? Watching it very carefully day and night. Anyway, the plane was delivered to China, and when it was delivered to China, they looked at it, totally bugged, by the way. And all those security people that China sent were, they lost their jobs. I mean, this is an issue. You have these kinds of security. We recognize that economics is one thing, that's different. Security is a different issue. And both sides have what I call policies which are, you don't want to hear about them, right?
Well, actually, maybe China learned a lot about how to put bugs in from that particular plane. Synergy. You talked about synergy. I want to know, having a very strong, effective company in China dominating in the automotive and other things. Same here, having a strong presence in the U.S. How does that synergy work for your own company, the exchange of know-how, technology, talent, and whatever between U.S. and China for Wanxiang? Does it work?
Sometime.
Can you give some examples?
Yeah, so I would say, just like a U.S.-China relationship, it's very complicated. And while there's a lot of synergy, there's a lot of cooperation, but definitely there's a different opinion and a different system, different way to manage. I just follow up what Dr. Huang saying about the CFIUS. And I just give you as an example.
Yeah.
We have been through many CFIUS review, and honestly, we didn't have any issue. Okay. So from my point of view, there's two different CFIUS here. One is called professional CFIUS, and that is a bunch of professional people review them and compare to the code and so forth and so on. Another one is a political CFIUS. So you can always come through with the professional CFIUS, and that is there. And there's I always joke, if I hire a more expensive lawyer, I'm going to win. That's okay, So I know you hate them. That's okay. And but there's always a political environment that we cannot avoid. So the question is, how do you deal with that? And our experience is that you don't deal with the political win, because you will never win by fighting with the. I always joke this. I'm coming from Chicago. It's a windy city, so I know how to deal with the wind. And stay down. You don't need to fight with the wind, because the wind is going to change the direction tomorrow. You never know where it's going to come. You're not going to be able to grasp it. So anyway, talk back on your question about the synergy. Yes, there is a lot of different opinion. The typical way we saw, we have a USA company, we bought it. They go back to set up a Chinese subsidiary. A lot of fight. The Chinese management team always think the USA is too slow, too lazy, too complicated, and a lot of PPT, but cannot make a decision. The American team look at the Chinese, say they're crazy, they're just taking a shortcut, they're not thinking through carefully, and they're going to destroy the company. Both have some truth to that. I'll be honest with you. Our job is I always say, it doesn't really matter. You're all Wanxiang employee, right? So let's sit down and figure it out. And the worst part is you take the weakness from both sides. So not only you're slow, but you're crazy. or the best one, you take the good from both sides. You're professional and you're effective.
And that's what you mean by synergy, right?
Yes. And you can make that happen, but it does take a lot of effort. And again, back to my beginning, what I'm saying, the U.S.-China economy is the same thing. We got to have effective communication. We got to have some transparency. You cannot have people just come into the room, make a statement, but without the mindset to be open-minded, to negotiate and compromise. That's the issue.
Now, one of our conversations before the panel started, you mentioned that a situation where even the senior senator from your state didn't know about your business or what you're doing and was very quick to cast dispersion about quote-unquote Chinese investment. Do you want to tell the story? That's a controversial topic to go on national radio.
I need to make sure there's no camera here, you know.
But you're on radio.
I'm on radio. That's okay. No, I mean, I would say there's a lot of misperception. That's what we have to deal with. The misperception could come from many, many different angles. As I mentioned earlier today, one misperception from the Chinese company coming to the United States, I met with a lot of them. And that's the reason I was asking Secretary Pritzker, you know, who was the Department of Commerce secretary. I said, for Chinese company, one of the confusing they come in here is that who's representing U.S. government? Is the president representing U.S. government, or the senator, or the newspaper, or the governor? Because they all talk differently, okay? When the government want to give you a hug, they know your wife's name and the birthday and everything. The press is saying you're coming here to steal the technology. You are the same company, and nothing has changed. But it's totally different perspective. Same thing on the other side. You know, as you see the senator situation, there's a lot of this kind of sense that we should do a better job. I'm just talking about as a Chinese company to ourselves. We need to do a better job. To do a better job to be able to communicate to the community that who we are, why we're here. We're not here to steal the job. We're not here to steal technology. We're here to really invest, to grow the business. As I always say, you know, when we hire, you know, tens of thousands of people, pays millions of dollars tax, invest in the billions of dollars, you know, from 2010, we're already investing more than $10 billion in the United States. We are here to be part of the community. This is our, I mean, I use that as an example. 2011, when President Obama and the President Hu Jintao, when President Hu Jintao made a state visit, we got invited to the White House with the two presidents. So, you know, there's a few CE on both sides. President Obama's job is to ask us, you know, how can we do better to make you invest more? And our answer was pretty simple. We want to feel that this is a home for us. If we feel this is a homecoming, we don't have ambiguity, we don't have a bias, we don't have discrimination, we don't have a concern about what's going on tomorrow, then we want.
Okay. We have time for one quick answer to a question that goes to you, Yukon. Mm-hmm. This question seems to imply that the Great Firewall in China has somehow impeded Chinese economic and political growth. Mm-hmm. What's your take on that?
Well, I think it's a common assumption that you put barriers to information exchange, you're not going to be as innovative as possible. That's the assumption. And I think in terms of logic, there's a lot of sense behind that, of course.
Yeah.
But China's also been able to do this in a way that surprises me.
Yeah, the logic is a Western-rooted logic.
Correct. Western-rooted logic.
Right.
And I've thought for years that this would in fact be the case. I'm not so sure anymore. I think they've actually been able to implement this in a way that has not created the problems that I would have guessed before. But we'll only see. This is only something we're going to be able to tell afterwards.
Well, but this Great Firewall's been there for as long as I can remember.
Well, it's been modified over time, and it applies to different issues, right?
Okay, I think we're almost out of time. Our thanks to Ping Ni, president of Wanxiang America, a wholly owned U.S. subsidiary of Wanxiang Group Company in Hangzhou. And our thanks to Dr. Yukon Huang, senior fellow at the Carnegie Endowment, former country director for China at the World Bank, and he'll be available to sign the book outside, cracking the China conundrum. You got more plugs today, Yukon.
Thank you, sir. I live off of this. You know?
And we also thank everybody here as well as our audience on radio, television, network. Tonight's program has been co-organized by the Committee of 100. I'm George Koo, and now this meeting of the Commonwealth Club of California, and the place where you're in the know, is adjourned.
Thank you.